take a look at your market news now. Japan stocks were higher after the close this morning as gains in the paper and pulp, railway, bus and real estate sectors led shares higher. China stocks ended higher on Tuesday as a dim services sector reinforced hopes that Beijing will roll out more stimulus measures. The uncertainties around Sino-US trade talks curbed gains. The country's markets on Tuesday reopened after a week-long holiday. Shares of Hong Kong exchanges and clearing jumped after the company announced that it was dropping its around $37 billion bid to buy the London Stock Exchange after the two companies' boards were unable to engage further. The LSE had previously rejected HKX's bid, which turned hostile. Now, at the close in Tokyo, the Nikkei gained almost 1% to close at 21,587 points. Hong Kong's Hang Seng Index gained 1% as it reopened after a holiday on Monday. Mainland China's markets reopened after a week-long holiday, with the Shanghai Composite rising 0.8%. Stocks closed modestly lower last night ahead of a fresh round of high-level tariff negotiations between Beijing and Washington that are scheduled to begin later this week. The Dow Jones Industrial Average fell 1/3% to close at 26,478 points. The S&P 500 index picked up 0.5% to end at 2,938 points, and the Nasdaq Composite Index gave up 0.3% to finish at 7,956 points. Let's get you more from the markets. My colleague Arabile Gumede is standing by at the Johannesburg Stock Exchange. A very good afternoon to you, Arabile. What's moving markets and how are we doing today?
Yeah, good afternoon then, Nzinga. Certainly, market movements have been ones that have perhaps focused a little bit more on the China-US trade situation and how things fare on that front. I suppose the interesting elements here will be just exactly whether we get some sort of plan being put to bed then by the Chinese and the United States. It's perhaps not looking likely, with Donald Trump even coming through yesterday, really just noting that a trade deal would not be as easy as he had pointed out for at least the last 16 months, if not more. So certainly things not working out the same on that front. Even then, as you mentioned, the Hong Kong Stock Exchange then deciding to withdraw its bid for the London Stock Exchange. That $37 billion was set to make it the third largest stock exchange there behind the New York Stock Exchange and the Nasdaq. So that deal not going through either then. On the local front, well, we saw the likes of Clicks do a whole lot better yesterday, and that market sentiment, perhaps one that retailers will be looking out for across the board, asking themselves what exactly needs to be done, what was right in that form in order to keep things going ahead as well. We'll unpack all of that detail in just a bit. For now, though, let's take a look at exactly how the numbers are faring, and we'll unpack them in just a bit. Well, some distinct weakness coming through there for the local currency, right? 15.24 then against the US dollar. So certainly not a market outlook that we'd like to see. Certainly the Rand perhaps was hoping to head towards that 15 Rand mark, having seen those better than expected numbers out of the United States when it comes to the jobs numbers, with the unemployment rate there sitting at 3.5%. But let's unpack the overall market picture. Kabelo Tola from FNB Wealth and Investment joins us live here at the Johannesburg Stock Exchange as we unpack this market picture a little bit more. Kabelo, thank you so much for the time. Really appreciate it. When one takes a look at perhaps the currency for starters, 15.27 now against that US dollar, a distinct set of array or sort of kind of weakness really filtering through. Anything to write home about? Anything that perhaps concerns you a little bit more there?
Certainly. I think most important to me is that not all factors that influence the Rand are locally based. It's not all things that we have control over. And probably this current route that we're seeing here from about 15.05 to 15.24 is really on the back of developments in the Middle East, in Turkey, to be specific. Yeah. We're seeing heightened tensions there, and emerging markets tend to have this knock-on effect on each other. Whether you're talking the Brazilian real, you're talking the Turkish lira, and even the Russian ruble. Unfortunately, also the Rand is very liquid and is sort of the go-to currency for for a lot of risk on, risk off developments.
And looking at it then, 15.28 against the US dollar, certainly a weakened stance there when it comes to it on that front. Overall, the old share as well going down a quarter percentage point there. Financials going down nearly 1% as well. So some distinct weakness as well in our equity space. But when one takes a look at retailers, yesterday Clicks coming out and they're seeing some much better numbers coming out of their operations there as well. 18% up, the projected stance for their profits.
Indeed. So they've revised their profit outlook up from about 10 to 15, I think, from up to 15 to 18% on this particular period. That's really a good set of numbers. Also, the context within which we're operating being weak retail environment, they've really evolved into, well, they've strategized quite well. We know they had certain units within their mix of companies that several years back were probably obsolete. I'm talking the likes of Musica, I'm talking, you know, the traditional CD business. But they've managed to reconfigure that business, for example, looking more for accessories. And of course, their distribution center coming to the fore now.
Yeah, so that certainly does get to play into their hands on that front. Not much really happening by way of equity news, but we did also get a sense that we get a purchasing sort of agreement now. It seems like a whole lot of stuff is happening in the mining sector. Impala Platinum looking now towards buying that Canadian palladium miner that is now Northern America Platinum Palladium, if it is. How interesting a move is that to try and diversify your business, and how much of a play is it in trying to perhaps bow out a little bit of the more risky spaces in Southern Africa?
Look, I think they've been honest about their intentions to lower their cost per unit and to move into alternative yet complementary commodities. So they've bought this business out in Canada for about $1 billion Canadian dollars, taken about 350 worth of debt. They did have some cash, which is always good. And Impala on a 5-year high, north of 100 Rand. Goodness, I mean, several years back, these were 30 Rand a share, now back at 100 Rand. So clearly the mining companies are doing something well. Yes, you know, that element of sort of disinvesting from the country perhaps starting to come to the fore. You know, there's wage negotiation. There's all of these things that a lot of our mining companies are not too happy with at the current moment. So yes, they've mentioned almost fully mechanized operation just northeast of Toronto, Ontario, I beg your pardon. I think it's complementary to the business. I would worry perhaps that palladium might be at the top end of its run. It's sitting quite high. So apart from that, you know, a nice diverse set of commodities, different geographies, probably not a bad investment.
One of their main mines has a lifespan of around 5 years or so, but can be I think it's 7 years actually, but can be extended to around 15 years. Yes, you make note of how the palladium price has probably run hard, but giving you a 15-year lifespan sort of just tells you that perhaps you could really milk it if in any way for everything it's sort of got. Over the horizon, the expectation would be that perhaps the price would be sufficiently at current levels or therein and thereabouts, right?
Indeed. So one would have to look at the all-in sustaining cost of that operation there. Remember, they're getting underground, surface, as well as a concentrator plant. So they've got the full sort of value chain within that operation. And yes, I think they were saying about 9 years life of mine left. Happy to extend it. And of course, this is based on their due diligence as well. Otherwise, they wouldn't be going into the actual investment. It will be accretive, but I do worry about the sustainability of those elevated palladium prices, as well as the core investment case, which is basically that emissions need to be cut across many different countries, India, China, etc. And the best way to do that is to look into reducing it off the catalytic converters that are used in these diesel engines.
Yeah. If one then takes a look at perhaps another absurd element, Hong Kong looking to buy the London Stock Exchange. When they announced the deal, I thought it was absurd in itself. and now they've decided to withdraw that bid, $37 billion. Was it because it was really just insane?
I don't think so. I think there might have been some pushback. I think it was probably it wasn't a bad offer. That's a decent amount for the LME. But they're citing limited or lack of management and shareholder approval for the deal. Now we know that the Hong Kong Stock Exchange is operating out of Hong Kong, but there's a large Chinese influence within Hong Kong. So I don't know if you see where I'm going, but there could have been pushback from what could have been perceived as a sort of takeover coming from the mainland.
Yes.
But I think the number really did make sense. It's just a pity they didn't pull it through.
Certainly would be interesting to see if it had come through, just exactly what that really means market-wise. Well, overall, the market picture, a tinge red as well for the all share, going down 0.2%. As I said a little bit earlier, a big drop as well for the financials, which seems to be the biggest losers today, 0.9%. The South African currency, 15.26 odd against the US dollar. That is exactly the state of the market at present. That's how things fare. It certainly hasn't been the greatest. Of course, we do await the mining and manufacturing data, which comes out on Thursday as well, and we'll get to unpack that for you, of course, live here on Point. For now, though, that is where the buck stops. That's back to my colleague Nzinga right after this. Do stay tuned.